Hi guys, welcome back to the channel. I hope you're doing great. If you're new to the channel, please subscribe to support it and to see more videos like this one where we trade the markets the minimalist way, making clear and simple analysis using clear and simple trading indicators. Today I'm looking at the Australian dollar, Canadian dollar on the 1 hour time frame, and I'm using three indicators: the bottom stop signal, the levels and zones, and the RSI Exhaustion. If you want to test the indicators, these indicators and more indicators, you find the link in the description down below. So today I'm looking for a short setup here. Recently, this pair has been trading kind of sideways, but with quite significant volatility in the most recent price action. You see here it comes all the way back down quite rapidly and then all the way up. Actually here we had a buy setup here because we had this bottom which was higher than the previous one, and then we also got the RSI which was increasing. It was exhausted right at this bottom, so I would have traded entering at this level here, so that at the close of this candle, so that I would have been sure that the bottom of the previous candle was confirmed, and then stop loss below here and target. You take this 8 here and then you project it to the upside from the lowest point here up to where it ends. So the target will have been here, and as you can see, the trade would have been very profitable. So this is not the case today, so let's focus on the trade that we have today. It's an interesting opportunity and it's very clear. So we have the price which is moving higher. You see here the price is moving higher, but at the same time we have the RSI which is moving substantially lower. The first condition that we always check when we look at the charts with the bottom stop signal and the RSI exhaustion is to have divergence between the price and the RSI exhaustion. And in this case, we do have divergence, so the first condition is met. The second condition is to have the RSI exhaustion to be exhausted. And in this case it is bullish exhausted, so we want to trade this price action to the downside. So we want bullish exhaustion so that the price doesn't have enough room to go any higher. And this is okay because it confirms our overview of this price action which should take place going forward. And the last condition, which is the simplest one, is to have a top, and we have a top here. We also have a top here, which the last one is even higher than the previous one, and then we also have so you can see these two tops like just one single top, and we also have one first top here. So we have three tops here which are higher than each one is higher than the previous one, and we also have the divergence here. So divergent, exhaustion, tops, we have a perfect setup. So the only concerning thing would be that we are now sitting above a support because this resistance turned into a support. But since we have very strong evidence that the price should go down, the reasoning that I'm making is that if the price is able to come back down lower than this support, then this support will play a strong role towards our target because it becomes a resistance, which means that it will prevent the price from moving back higher. Okay, so this is the only risk that I see in the initial part of our trade, because as long as the price maintains itself higher than this support, then we might end up with a losing trade. But as soon as the price comes back down, the chances that we get to the target are very high. So right now the setup is very strong, but we also remember that we are sitting above a support. So what we need to do is, of course, set our entry level around this level here, but the thing that we need to do is to be a little bit generous with our stop loss, so that we are sure that the price can move higher and still not close our trade, because as long as it stays above here, we might have some troubles. Okay, it's simple. We just stay a little bit generous with our stop loss, so we don't stay too strict the stop loss must be higher than the most recent highest point. Okay, so it must be higher than this. We don't stay too strict like this, but we give it enough room to move around. Okay, so this looks like it might work. And for the target, well, the price, if the price comes down, it could come down quite significantly given this recent volatility. But as always, we want to play safe. So by playing safe, I will set my target to be this support down here, because we know that these levels, which are given by the levels and zones, are very strong major levels. And so since the price likes to test this level multiple times, not once but multiple times, we should expect that if the price comes down as we are expecting, then it will definitely reach this target here. So it will definitely come all the way back down here. Okay, so the trade is set. I keep you updated on how it plays out. We had a little bit of trouble initially because, as you can see, the price moved towards our stop loss, and this, guys, is the reason why you should always, well, first of all, set a stop loss, but also in this kind of trades, be a little bit generous, because if you are too strict, as I was saying before, you probably would end up with a losing trade. If I were stricter and set my stop loss just slightly above the previous highest point, then right now I would be out with a losing trade. Of course, I don't know where this trade is going, because as long as we are above this support level here, the trade might still go up, the price might still go up, so the trade might still end up with a losing trade. But looking at the RSI, which continues to come down, it signals that the price should eventually move to the downside. So I believe I'm enough safe with this stop loss, even considering that it moved higher and then got pushed down below. I believe that I'm enough safe. Of course, we cannot be 100% sure until we are above this support level here, which was the only risk factor in this trade. But as I said, the RSI goes down, so on a technical point of view, it's good. We just need to be a bit more patient and see how this evolves. So a quick update, guys. The price played a bit more above the support, but then it decided to come down, and it's moving quite fast, and considering the recent volatility is not a big surprise. But the most important thing is that right now we are below the level, so this level is now our resistance, and it has dramatically increased the likelihood that we will reach the target. So if our initial analysis was correct, now we are even more confident in the fact that we will ultimately reach the level, because when the price moves and it moves down, the chances that it will touch this support level down here are very, very high. And now we also have on our side this upper level here, which is now our resistance. We just need to wait a bit more and see how the price continues to move. Right now it's moving fast. The RSI is dropping, and it is also bearish exhausted, which is okay since the price moves down. We also want to see the RSI go down and also get exhausted, because it means that this whole movement here is kind of sustained by the movement of the RSI. Okay, they are moving accordingly, one with the other. I'll keep you updated on how it goes. Okay, so we got to our target, guys. We got to the target and our return was more than 2.5x, so 2.62x. which is good. Considering how fast it is moving, I'd say that the price might have some more downward movement because it's moving very fast. The RSI is just continues to fall down, and as long as it stays oversold and exhausted as well, considering the price moves this fast, it can continue to fall quite substantially, and the RSI continue to stay oversold and exhausted for a prolonged period of time. So our trade was very safe, and so we got what we wanted. If you were more on the aggressive side, maybe looking at how the price was moving, you could have maybe set a second target even lower, so you could have closed part of your trade at this level here, and then closed even lower second portion of your trade. This is typically something I don't do, and in fact I didn't do it in this case, because as long as I have an initial analysis which is solid, which is correct, considering the previous price action and considering the indicators that I'm using, which I trust because I'm confident, because I tested them over an extended period of time. I use them daily since many years, so I'm very confident on them. As long as I made this initial analysis, which I strongly believe it is correct, then I typically stick to it, and that's it. If some technical evidence emerges during the trade, then I might change my mind because something might get compromised, or maybe something might turn into our favor. For instance, in this case, I'm saying might because it's not necessarily the case, but if this resistance up here would have moved something like this, like down here during the trade, then I might have lowered my target, because you should see that kind of price action like a downward pressure to the price. Okay, so in that case, maybe I would have moved the target a bit lower, or as I said before, maybe I would have closed partially the trade at this level, and then I would have aimed for a bigger target for another part of the trade. But this is, as I said, something that I typically don't do, and in fact in this case, regardless of where the price is going right now, I just stick to my initial analysis. And this, guys, is the best way to be consistently profitable over a long period of time. So today we got a 2.6x return, which is a very solid return. It's not the greatest, but very solid looking at the long term. I hope you guys enjoyed the video. If you did, make sure to like it, and also subscribe if you didn't already. If you have any question, feel free to ask down below, and I'll see you guys in the next one.